People tend to go to the US because they've been invited by their company. And if your company is inviting you to the US and planning to get you a visa, it's because they're struggling to hire someone of your quality in the US, which means you're probably pretty good at what you do. You're probably pretty well paid. Your assets are probably reasonably sizable. And you're probably worth talking to from a prospect point of view. So it became clear to me that that was an area that I had the qualifications. I was Series 65 licensed, UK qualified, that I had an area of expertise and niche for myself in, and that it was a potentially very lucrative market in terms of the amount of clients there and the amount of assets there.
Huge. Fantastic. I love that. Great overview. We're going to dig a little bit deeper because there's a few things that came up that people listening to this episode might not know about.
Yep.
One of those words you used was Series 65.
Yeah,
so tell us a little bit about Series 65 and why do you need Series 65?
So if you want to give investment advice to people in the US, even on assets that they've got elsewhere, like the UK pensions, you need to be qualified in the US to give that advice. In the US, that qualification, that investment qualification is called the Series 65. You can take it in London, so that's what I did. So a few years back now, I can't remember exactly when it was. It's not the most straightforward exam, but it is a multiple choice exam. I think it's 3 hours long, but with a bit of study, you can certainly get it done. There's obviously crossovers, so if you're a UK qualified advisor, the same basic principles are there. You know, a SIP, as we would know it, is called an individual retirement account over there and so on. So you'll pick these things up, but getting that exam done, one multiple choice exam, puts you in a position where you can give advice to clients that at the moment perhaps underserviced.
How big is that opportunity?
I mean, it's difficult for me to fully state the size of that opportunity. So if you look at where wealth sits, the US is where it sits. There are, and I believe the numbers are approaching trillions they are in the trillions, not approaching trillions. They're in the trillions in US retirement assets. You know, those are huge, huge numbers compared to anywhere else in the world. So if you want to look at the pie, if you like, if you want to be managing people's assets, the US is where those assets are largest. It's much easier to carve out a tiny percentage of a huge pie than it is to focus on something that's already overserviced and where the pie's not as big and there's already big players and so on. So, and the other thing that makes it interesting there is that the competition that you're likely to face from, I suppose, the people that we're punching upwards towards and trying to compete with eventually, but and that's probably a bit of an arrogant comment, but Goldman Sachs, JP Morgan, but the types of accounts they manage are enormous. Their interest in what they would consider lower end retail clients of 1 million, 2 million, 3 million is perhaps not as big as what you might find competing in the UK for those same accounts. In the UK, that's a big account. To Goldman Sachs, that's a tiny account, which gives us the opportunity to go in and overservice in that area. So if you're an individual advisor sat here in the UK struggling to take on clients at those levels, but then you look at the US where actually the service they're getting from their current provider is not really that important to us. We'd rather you had 10 times that. Actually much easier to get into that market.
And are these individuals that are expat, say they're from the UK and they moved to America, or are you dealing with actual Americans that were born and raised there? Yeah,
so typically it's UK expats that have moved there. Again, that's the niche. I am British. I sit here in the UK. So that's the niche that suits me. The guys we have working out there, Bradley, I know you've spoken to as well, will tell you that the US guys like dealing with us Brits as well. So but we can cater to the whole market. I suppose if you look at that sniper-like focus in terms of targeting what you think you're best at, the Brits is where we've started out, particularly with the niche that we're able to manage their UK assets in addition to their US. So where I really position myself as an advisor now, so if we're talking about what I would be discussing with a client, I consider myself a private wealth manager. I consider that I have a specific area of expertise, which in particular is UK-US assets. I would suggest that a typical client of mine should have both. So that's the area that I can laser-like focus on and really add support in. So if you've got retirement assets in the US, retirement assets in the UK, other assets may be dotted around the world as well, and you're looking for a holistic view of how to manage all of that and build a structured retirement plan, I'm your guy. Is basically the structure of what I'm doing.
Fantastic. Great explanation. Thanks so much for that. I think people listening to this will really want to understand how can you be a UK-based financial planner but build a book of business in the US. So what have you, just out of interest, let's give some people some context.
Yep.
What have you got under management?
About 80 million.
About 80 million.
Yeah.
And you generated that in the last 6 years.
Yes.
That's huge. Well done.
Thanks.
What percentage of that business is US?
About 80%.
80%.
Yeah.
Okay. How often do you go to the USA?
Well, you're going to catch me out because the answer is not a lot.
Yeah.
The answer is not a lot. I do want to go more. So I suppose giving you some substance to, this actually ties in with Hoxton's journey as well. If we look back to the period in which I've been building that book, we set our business up not long before COVID hit. I think Hoxton generally benefited quite well. I don't want to say, COVID was a good thing, but we benefited quite well from being a young company during that period, not having too many fixed processes that we were so wedded to that we couldn't adjust. And what we were able to do is transition very quickly to online. So meetings moved from face-to-face to video very, very quickly. That for us allowed us to service clients instead of being focused like perhaps competitors that already existed in the industry on face-to-face meetings where if I want to deal with a client on one side of the US and then California to New York, for example, on the same day, that's impossible if you're flying to meet these people. On a video call, you can finish and 2 seconds later jump onto a call with someone in New York, which allowed us to transition, or allowed me certainly to transition to servicing individuals all over the US without being there. And then if you tie in the fact that often the topic of conversation was starting out as UK assets they've left behind and my qualifications here in the UK and the fact that I sit on the license here, ultimately that gave me some credence to look at that and then start those conversations building from there. So actually, you can service clients in the US without necessarily being there too much. COVID and video calls to perhaps thank for that. Although I would argue, yes, you've got to get out there more and get a little bit more face-to-face eventually with your client bank. But it's not necessary to actually start building a book to be physically residing in the US and be there on a regular basis.